Yeah, it's probably not as small as you think now, Steve, and I would encourage you to look for that while I witter on. But I would imagine it must be 17 or 18 billion at the moment, but we shall see. So this is Duolingo, the language learning app that Steve and I both use to fail at learning languages. Um, they have had a pretty incredible time since their IPO. They IPO'd at about $140 close. Today they're at 486. I bought these in the Capital Incinerator, Steve, at $70. So we are up nearly 500% there or thereabouts. Um, I really like this company. I kind of wish I'd not bought in the silly account and bought in the actual account. But here's the data, and you can let me know what you think. Revenue came in at 230.7 million. The street wanted 223 million, so a pretty handy beat, really. It was up 38% year on year. Diluted EPS came in at 72 cents. The street wanted 52 cents. So again, a very, very handy beat. Subscription revenue was 191 million, up 45% year on year. Adjusted EBITDA, Steve, was adjusted to 62.8 million, and that's a margin of 27.2%. 103 million in free cash flow, up 44.6. Total bookings. So remember, this is a software company, so you can buy credits with Duolingo, and until you spend those credits, they can't recognize that as revenue. It's the same with things like Roblox and things like that. So if you ever come across that and you're confused, that's what it means. So bookings is 271.6 million, up 38% year on year. So there's a whole other revenue to recognize, essentially, at some point in the future. Subscription bookings, Steve, 232.2 million, up 44% year on year. And that again is just forward buying subscription. So Q2 guidance, they said would be about 238.5 million to 241.5 million. The street wanted 233 million. And that midpoint's about 34% year on year. So a nice handy beat at the midpoint and still strong growth. They said they'd probably do about 58.4 million to 61.6 million in EBITDA. That's around a 25% margin. In terms of the full year guide, they said 987 to 996 million. The street wanted 977. So again, another healthy beat at the midpoint, which would be up about 32% year on year. And they said they'd do 271.4 to 284 million in adjusted EBITDA, and that'd be another margin of about 28%. So margins improving as well. They gave us some other interesting stats, Steve. So DAOs, daily active users, this is just the people who use the app every day, 46.6 million people. That's up 49% year on year. Monthly active users, that's Steve and I, who sort of log on just to stop the bird from threatening us. 130.2 million, that's up 33% year on year. And paid subscribers is now up to 10.3 million. That's up 40% year on year. So really impressive growth in all the user and engagement metrics there. They said that they've launched 148 new language courses, and they've been doing this, Steve, using generative AI. And if you just want to compare that to the previous 12 years, Steve, in the previous 12 years, they only launched 100. So 148 new courses versus the 12 years to release 100. Maybe this is an example where AI is proving really, really beneficial. They have an AI-powered Max tier now, with adoption amongst its users is accelerating. They said that there's early cost optimization of role play Gen AI expenses. So this is basically the Gen AI will talk to you in a different language and encourage you to learn that way. They've also have a chess course that they're trialing at the moment, which is just something they're trying to see if they can sort of broaden the learning footprint beyond just languages. They also was really proud of what they said was the Dead Duo campaign, which drove about 1.7 billion in organic impressions and record daily active users. So they've long been a very good marketing company, and that seems to be continuing. So they said CEO Luis von Ahn said that AI has been a really beneficial thing for the company. They said it lets us scale content faster whilst improving our profitability. 2025 is off to a fantastic start. The CFO, Matt Scarupa, raised full year 25 outlook on strong max and family plan demands, and he expected the H2 gross margin improvement to happen as their AI compute costs fall. Hard to be disappointed with anything in here, Steve. The market absolutely despised it and only sent it up 28% on the week. What's jumping out at you there, Steve? Anything interesting?
21% on the day, and it means that when I looked at the market cap number, your market cap number would have been right if it hadn't just gone up about 28% in a day. So your 17 to 18 would have been pretty close. It's now 20, just short of 22, basically, as we're recording this. So yeah, a big old unit. I just don't get this. I mean, I get it at one level, and I don't get it at another level, and I like a lot more where it's heading than where it's been, which is kind of interesting. I'll tell you more about that in a second. So I get that there's a freemium model here, right? You can you've got an ad-supported tier, and you've got a kind of paid-for tier used by all the best businesses like Netflix and Spotify and probably some others as well. So all of that makes sense to me, and I don't have a strong feeling as to whether I think people want to tolerate ads on this. The answer seems to be largely no, because as you know, my view on Netflix is that people will be okay with ads in that part of the business, and Spotify, I think they will not put up with their free service and ads and stuff. They will pay. My instinct with Duolingo, I don't know where I would have gone with that, but I think their main kind of revenue driver is kind of memberships and stuff, right? So they make a lot more money through that, which kind of indicates to me that there is a decent demand for the Spotify alike rather than the Netflix alike. When I've used the product before in the past, and I'm a long way from being one of those monthly active users, by the way, so not one off of your calculation, I have put up with the ads, I think has been my approach. The thing I just don't get about this is I don't think I really learn anything on Duolingo. I think it's kind of rubbish for learning languages. I got some badges. They're on my LinkedIn profile. And the reason I know that is because, well, I was at a dinner with my students, and it was a nice kind of jolly midterm thing. And they had a nice quiz about the tutors. And they said, what are the only 2 qualifications on my LinkedIn profile? To which my reaction was, I didn't know I had one, but it turns out it's Duolingo like level 3 French and Duolingo level 2 German or something like that, which must be about 1 billion years old. And I think maybe the only reason I'm on LinkedIn technically, and I'm not on LinkedIn in any meaningful way. But here's the thing. 2 things. Number one, very hard to argue with those numbers. Someone likes it somewhere and is willing to pay for it and feels like they are either enjoying the gamified nature of it or genuinely learning languages. And I'm really interested to see along these lines that AI is useful to them and a benefit to them, because there's one thing I would expect AI to be able to do. It's turn things from one language into another language pretty accurately. There's a UK company I've been looking at called, I think, RWS, which is basically a specialist translation engine. And it's hard to tell whether they're AI roadkill or AI amazing, because they specialize in really important things like patents, where you hadn't better get this wrong in this translation. And that's their kind of thing. And are you really going to ship that out to an AI engine with a lot at stake? Don't know. More on them another day. But Duolingo's doing really good, basically using AI to generate and do their job for them, which is fantastic. The other thing I really like about them is moving into areas that are not languages. It's kind of tough for their name. They may have to rethink that bit. But there are other apps around, like Brilliant is a good example here, that try and teach you other things. They try and teach you things like, it's sort of a language, but coding, more of a kind of artificial language than a natural language, or a formal language than a natural language. And they try and teach you various bits and pieces like economics or even philosophy or whatever. I think those are much more effective than language learning things. I've always got on much better with trying to learn things like that through an app than learning things like French or German through an app. And I think if Duolingo can get itself set up as a big dominant player in that, I saw it called on X. Someone said on X that they were monopolizing learning, which I think is too strong. But My initial reaction was they're monopolizing language learning, maybe if you squinted it, but the idea that they're expanding outwards into chess is a perfectly decent example. That's really attractive to me. The idea they might push out kind of further from there. So yeah, lots that's impressive here. And my initial kind of hesitation at the business of thinking, surely someday people are going to wake up and realize that I just don't see how people learn anything on this thing. Might well be subsiding based on the fact that less the AI bit, although I quite liked the conversation stuff that you mentioned and role playing and so on, more the capacity to expand this beyond languages. Suddenly, this looks like a much bigger business, not just in terms of sales, but in terms of stuff.
So, two of the other avenues that they're exploring, Steve, that might make it slightly more. Well, I just add some colour to what you're saying. Really, is they've already started to launch some offerings in math and also in music as well, which are obviously along the right kind of lines to what you're expecting. But yeah, I mean, with a company of this kind of size, with this kind of um, um, market cap, don't be surprised if they just go and buy out something like Brilliant and just add it to their services. A rebrand has just been called Duo or something, and off they go. But yeah, I agree with you largely, Steve. I tried to learn Italian on there, and it's awful because I've actually got I had a relative who moved to Italy and stayed there, started a family. Sadly passed, but it would be nice to converse with that family in Italian. So I set upon learning Italian, and I actually got quite far. I was every time it was throwing up a test, I was shooting through it, getting them all right, and I probably couldn't recall any of it, Stephen. I think that's the big issue. It's definitely not become a part of my brain where where it becomes second nature, and I could switch between the two. And I think that's the big issue with something like Duolingo. That may be the generative AI, especially in the way that, and again, if you've not used the Gemini app from Google, the way that you can talk to Gemini and get answers from it is really strange. If you could do that with Duolingo, I think that would make a huge difference to learning. But like having your own personal tutor. So yeah, I think that's a really interesting addition, and I haven't been on it since Duolingo. I'm not a monthly active user either, Steve. I've got it on my phone. I think more out of shame than anything, just to remind myself every so often that I probably should pick that back up. I don't think I've been on Duolingo since the since the AI hype kicked off, so it might be a totally different app to what I remember it being. I assume it would be, but yes, largely the business, Steve, is doing really, really well, and maybe what we think are shortcomings are potentially not. And who knows, Steve? Maybe these pro tiers and these these AI tiers and what have you are make a world of difference to people. But yeah, I'm really impressed with this business. I just think at $70 it was a screaming obvious buy for me. It was an obvious buy in the capital incinerator, and with a few businesses in the capital incinerator, I'm thinking back to that period. Your Monday.coms. Toast was one that I've recently picked up, but also Duolingo. They were such obvious quality, and I'd like to sort of channel my thought back to that period and think, what was I missing in my main portfolio? Why did I feel like a flight to quality over this flight to what at the time was incredible growth from these companies? Why that? Why I did that, and I think that's probably one of the big learnings I'll take from this sort of like half decade period of time of investing is that I probably made the wrong move there when I should have been doubling down on the companies that I really liked and the companies that I could plot growth on. I went a bit safer, and I would have made some pretty impressive, even more impressive returns had I not done that.
You've been watching a segment from the Playing FTSE show, brought to you in association with our favourite broker, Trading 212. For the full version of the show, check us out on Spotify, Apple, or wherever you get your podcasts. And if you open a new account with Trading 212 using the link in the description, there's a free fractional share in it for you. Just make sure that you use the code FTSE when you sign up. Terms and conditions apply, and do remember that when investing, your capital is at risk.